Alright, so if I'm right, what's the name of the project that you guys are supposed to do?
It's
supposed to be the core banking application, right? Well, I understand that you guys don't even know where to start, what to do, just confused. Okay, so this would, open your mind, sort of. This class is not meant to be exhaustive of the projects you're supposed to do. It will even go, in some cases, beyond what you are meant to do, right? So it's just meant to give you a bit of understanding, just generally, with regards to core banking concepts, right? So, of course, when we are still done, you can still ask questions with regards to your project. It's still very fine, right? So, I don't know, I guess you guys might have read through. Another project has like a list of items that is requirements that you're supposed to adhere to. So if you've gone through them, any of them that you have questions with regards, you can definitely ask. I will try my best also, right?
Sir, do you need any paradigm
Of okay.
to science covenants?
Covenant. So you need each other.
Yes.
Covenant. It's been a while we have covenant. It's now we have quite a lot of them. Okay, so electronics, I think pretty much standard stuff. Okay, so where do I like to start this? What's the name of this class? You guys don't have any idea what Okay, so let me use this. It's meant to be about like CBA, core banking, application infrastructure, and concepts. So let's just say core banking application concepts. Alright? Now, I don't have any notes, but what I like to do is this. There's a diagram I'm going to put up that will help me and will guide me towards the course of this particular class. If I want to, if it's possible, you can. Are you fine? Are you fine this way?
Yes.
You're fine. Okay, so we're going to start first with a very. So what's the time we start? 2:45. We're going to start theoretically with a bank. I just want you guys to just formulate a name. Whatever the name is. Moles Bank.
MOE. MOE.
MOE.
Name of the bank.
Pronounce it.
MOE. Moles. MOES.
Moles Bank. Why Moles? I'm just.
That's my brand.
That's your brand. Okay.
Do you guys agree?
Yeah, the first to say, so it's fine. Nobody is trying to suggest anything. So that's fine. I'll pick that. So Moles Bank.
Yes.
What does Moles mean, by the way?
It's an abbreviation of my name.
Okay, so the bank I'm working with is Moles Bank, right? So, like I said, I'm just going to draw something here, then I'll base this class on what I'm going to draw out. I'll also write out some other items here. So, you can draw with me. So we have a bank called Moles Bank, and then we have something here called Open Business. We have this called Open Branch A. Open Branch B. And then this continues to branch N, right? And then we have something everyone here performs called perform your banking operations. And then we have this close branch A, close branch Because we have close branch. And don't worry, just if you want to draw, then you can draw. If you don't want to, it's fine. Huh? Well, yes, when it's finally edited. Okay, so sorry, this is pure business. You definitely do. Close business. And then we have something here called run EOD slash EOM slash EOI. Moles Bank. Moles Bank. Any of you drawing?
Yes.
Drawing, right? Okay. So. Just shift this here. Because we have this bank we're talking about, Moles Bank. Now after that, there are some other items I would also want to talk about. One, savings slash current accounts. I don't know if you can see this particular one well. It's a bit fluid. Fixed deposits. Three loans. Yes. It's too faint, right? I actually wanted it to be a different color. But no problem, I'll switch it out. So, let me start here. One, we said savings slash current accounts. Number two, we have fixed deposits. Three, we have loans. Four, we have what we call overdrafts. Anybody here heard about Islamic loans? Islamic loans. Does anybody here know what they're about? I have an idea. Okay, we'll get to all of that so that, you know, a lot of misconceptions about a lot of all these things. Five, we have what we call financial aid. Six, current aid. Financial current. Then, seven, we have what we call ledger balance. 8, available balance. 9, withdrawable balance. Probably add more. 10, we have VNs. Anyway, there will still be a lot more, but all this is going to guide the way this class is going to go. Right? So, but the diagram is the more important one. 10 liens, what I call liens. L-I-E-N-S.
Learn abbreviation for something.
No. It's the word. It's a word. You can check out the meaning in the dictionary. It's a word. But I'll get to each and every one of everything that I wrote down here. Okay, so we're talking about Mo's Bank, right? Now today, just let's imagine okay, so let's get some basic concepts out of the way before we start this particular class. In accounting, because the reason why I was asking whether if you guys had had any course before this is that there are actually some basic accounting fundamental concepts that if you don't know, they will not really, you might struggle sort of a bit in this one. So, do you guys have any idea of those top 5 category of accounts in accounting? Assets, liabilities, income, expense. She's the only one. Huh? No, but have you heard of any of them?
Yeah, I've heard of some, but I don't know what they mean.
What?
Well, not all of them. I know what's going on.
Okay, so which ones have you heard of?
Assets.
Okay,
Assets.
just assets.
Yeah, just assets.
Okay, so okay. So there are 5 of them. There are actually 5 of them: assets, liability, income, capital, and expense. Right? Income, expense, pretty much very straightforward from their names. Income is based on money you make. Expense is based on what you expend. You try to spend to do something. Assets, people generally have an idea around what assets are. Now, assets are so from a definition point of view, I might not really be able to give you that. But assets are tied into like 2 different parts. You have what you call cash assets, and then you have like non-cash assets. Cash assets are things like cash, actual cash. You have other things like money in the vault. You have a vault, right? You have a bank, like this Mo's Bank, that has a vault. You know what they call a vault, right? That physical thing in the bank, right, is a vault, right? This is another category of a cash asset. You have things like what you have a teller. Who is a teller? A teller is typically that person when you walk into a bank and you interact with that, let's say you are giving money or collecting money from, right? That's a teller. The account, there is some account that they work with, right? That account is the cash asset. Your ATM, every time you go to a bank and you withdraw money from an ATM, that ATM actually has an account, right? So, to a certain level, I might be able to explain it. Now, liability has to do with, so assets, there are still more types of assets, right? Now, for liabilities are, now everything I'm talking about now is with respect to a bank. Now, that's one very important thing that you guys have to know with regards to accounting. What do I mean? If you have money, you have, say, 10,000 naira with you now, and you take it to a bank, and you go and pay it into a bank. With respect to Mo's Bank, if you go and pay it into Mo's Bank, with respect to Mo's Bank, the bank is owing you money. So that money is a liability to them. With respect to you, if we're talking about you, is an asset to you. It's not, your money is not a liability to you. Do you understand? So at every point in time, usually there is a funny concept, that they always have to refer to, like, who are you talking about? Are you talking about with respect to I am the bank, or are you talking about when I am the individual? If you take a loan from a bank, the loan to you, when you take money, you are owing the bank. It becomes a liability to you. But to the bank, it is an asset to them. I don't know if you understand. Do you get, like, sorry, you need water? Are you sure? So just something that you would need to take note of. You have to go and read up the exact definitions of those top 5 categories. Okay? Now, sorry. One other so that's something you guys will have to read up on, right? I'm not
What's the fifth?
So, assets, expense, income, liability, capital. Assets, expense, income, liability, capital. Now, one other rule I will need us to, before I go in generally into it, one other rule I will need us to understand is that, so, let me just wait for that to come so that we can all carry it on. Let me see. Is there Mo's Bank? Moe
Okay.
Obe
Manual.
Manuel.
Go. No, it's just Mo. But Mo doesn't sound
Deep enough.
yes.
So
So
you have to do that.
yes.
Okay, so are you good? Sorry. So I've talked about those first 5 basic stuff. Now there is something called, what do they call that thing? In regards to in accounting where you have double entry posting. Now in accounting, there is a particular concept where what you have is that for every debit, or what you call a debit, there must be at least a credit. So what do I mean? You go into a bank and you pay money. That paying of money is a credit to your account. Now, even though your account is credited, there is something else called a debit that has to happen. So for everything that you call a transaction, there will actually be at least. Now, when I say at least, I mean I mean at least. The reason why I say at least is because, so just think about this now. So in accounting, it has to be at least one debit and one credit. The reason is this: the total debit, the total amount you are debiting, and the total amount you are crediting have to be the same. I don't even know if you get. So what that means in essence is that you can have 5 debits and 1 credit, where your 5 debits will have 1,000 naira, and your credit will just be the total. Yes, 5,000.
Is this in relation to the bank?
So these are just fundamental concepts
Okay.
with regards to accounting. I've not even started with this part called, but I'm doing this, like I said, because I don't think you guys have this understanding, this power, this knowledge. You're meant to have it, but since you don't have it, it's fine. Some parts we'll just try and rush through them. Right? Now that's the second part. Now the third thing, I will need you guys to cram this one. Now in accounting, there is what you call debit and credit, right? You've gone through some of the classes. Now, one thing people usually think is that every time you debit always sounds like you always subtract, right? And credit always sounds like you add money. But in accounting, it's not so. You know, we talked about assets. We talked about assets, right? Liability. Okay, assets, expense. What again? Income, liability, and capital. Income, liability, and capital. Now, in accounting, one thing you need to understand is that there are 3 of them. So normally, if you had, let's say, you had an account that had 1 million naira. If you debited the account with 500,000 naira, what do you expect should happen? It should go to 1.5 million, right? That's what, sorry, if you debited it, you expect that it should subtract, right? And it should go to 500,000 naira. That's what you would expect. But not in accounting. you need to know what category of account that it is to know what you are supposed to do. So the way I like to look at it, if after this class you can go and find out why, like I said before, I am not an accountant. I don't know why those rules were posted or how they were postulated, right? But the way I like to look at it is I have a very simple thing that says AE is equals to CLI. What I mean by that is that these three are the ones that work the way you expect it to work. These other two, not so. So if you debit an asset account, instead of it reducing, it will increase. The value will increase. If you debit an expense account, instead of it reducing, it will increase. The same way in the other way, if you credit them, instead of you thinking that they will increase, they go down. Right? So what's interesting about this is that in accounting, you can have a case where, remember what I was talking about the other time where I said there must be at least one debit and one credit. So you can actually have a case where you are debiting an account and crediting another account. And what you are seeing is that the value of the two of them are coming down. Because typically you would expect that if you debit one guy, let's say it should come down, and then you credit the other one, it should go up. So let me give you an instance. If you were debiting an asset and crediting an expense account. If you're debiting an asset and crediting an expense account, what's going to happen? When you debit the asset account, what happens to it? It will go up. When you credit the expense account, if you debit the expense account, what will happen? It will reduce, right? That's fine. But if you debit an asset and an income and you credit an income account, what's going to happen? If you debit the assets, what will happen? It will increase. If you credit the income, what will happen? It will increase. I don't know if you guys understand. So one thing you need to always make sure of, right, is that you have to always follow that fundamental rule. It's a very fundamental rule, that just says that when you are debiting and when you are crediting, what type of account are you working with? These are top 5 category. They are base top 5. But under them, they even have further subcategories. If you remember, when we're talking about assets, I mentioned things like cash assets and non-cash assets. Under cash assets, I talked about things like a vault or teller steal, or yes, there are a whole lot of them. I really can't go into them. Income, you have a lot of them. Liability, you have a lot of them. Liability, 1 and 2. These ones that we have here, savings accounts and fixed deposits. When we start talking about all these other guys, right? We will see what those things are all about. So I need you guys to have, just for the purposes of later on in this course, right? You have to cram that.
So I think there's no logical reason why.
No, there is. There is. I'm not explaining that to you. I'm not an accountant. That's my easy way out. But there actually is. There's a logical way out, but I really don't want to go into some of all that. It can actually extend this. Okay. Right? Yeah. Like it can extend this way. I've done almost 30 minutes that I shouldn't even have done. So even though I said 3 hours, we're going to 3.5 hours. Okay. You asked for it. So I don't know if anybody has any questions with regards to that first part that we talked about. Arnold. It's 5 days I have to get it. So IQ, Joshua, and Molly. Huh? Nobody forgets.
I said everybody forgets my name.
No, well, it wasn't just you. Okay, so I just want to be sure that we are good on that. Right? But like I always tell people, it's very fine if you take me back to wherever it is you don't understand. I need all of us to carry along and to move ahead together. Right? Okay. So let's continue with this diagram that we talked about. Right. So we're talking about most bank. Now, there is a particular concept called open business. Open business is not, so theoretically, it's not you just walking into the premises and going to open a padlock, right? Now, traditionally, the way this is on a core banking system, right? It is for purposes, or it's for control purposes. So when you have this called open business and you have these other items called open branch, right? This thing is meant to be able to, this prevents these actions from going on. And the same way, these ones will prevent this one from going on. Such that when this happens, right, nobody should be able to perform your normal banking operations. Nobody should be able to come and close branch or do anything. Now, let's use more realistic scenarios. So let's say, for instance, we have, what's one of the popular markets? Balogun market, right? And we know about Thursday markets, right? So we know about Thursdays in markets where typically markets don't open till when? Till 10 o'clock or thereabouts, right? Now, imagine that Stanbic Bank, right, had a branch in Balogun market, and then had another branch here in Lekki. Of course, they have a branch. I'm sure they have a branch there, and they also have many here in Lekki, right? Now, I'm just going to be hypothetically working with 2 branches. Now, the rule is very simple. At the beginning of the day, or sometime whenever it is decided, there is someone that is responsible for going to software and clicking on something we call open business, right? If that person doesn't do it, right, those different branches, that action will typically happen at the head office, conceptually. If that person doesn't do it, the people in the branch will not be able to perform their own actions called open branch. It's a control measure, like I said. Now, you can see here that this open branch is different for different branches. The reason is this. I talked about 2 branches now, right? Where I said one is in Balogun and the other one is in Lekki. Now imagine on your typical Thursday at 8 o'clock. The one at Lekki wants to open and attend to customers. And they go to the software and they do whatever it is, the open branch, and they continue doing what they need to do, right? But the one at Balogun is not going to open until when? 10 o'clock. And it's only until 10 o'clock on that particular day that they will perform this action, and then they will now be able to perform whatever banking operations, right, that they need to do. And then it's only when they do any of all that, then at the end of the day, right, they now perform these same actions that we call close business. And when you close business, there is something here. You can see that everything is just pretty much in a loop. This thing here called run EOD, EOM, EOI. Can anybody think it gets what this means? End of day, yes, end of month, end of year. Pretty simple, right? We'll go into further details about what all these things are about. My only fear is just these classes you guys are doing. This will be very deep. Okay.
Sir, for this gets to close branch.
Yeah, close business.
Close business, sir.
Yes.
Does all the not so?
Typically, yes. So if he tries to do this and just one is not yet closed, right, then something is going to fly and tell him that so and so hasn't yet closed. Right? Because this one needs to be aware of all the branches. Now, one other thing also is that it's possible that a branch did not open. If you did, so let's say this one opened business, and this one just opened, and this one opened, but this one didn't open at all. And only these 2 work for a particular day. That means it's only those 2 that will close. And it's only when those 2 close, when this is closing, it's not going to bother about this because this one never opened. Right? Now, one other concept, I'm going to pick out 2 items here from this list and talk about them because they are also going to assist with the class 2. So numbers 5 and 6. Now number 6, current date. Current date is very simple. Current date is just the date that you definitely know that we are born. So today is what? Today is 21st of August, right? Now, for financial date is a bit trickier. Every time I try to explain this one, it always feels very funny to understand. Now, the concept around financial date is very simple. So first, before I talk about financial date, you see this thing that occurs here. You can see this is in a loop, right? Now, I've talked about current date. Current date is just the dates that you are currently in. Financial date is the theoretical date. This is not really a definition, right? But when you understand it, you know what I'm talking about. Is the theoretical date that an institution is in. Just when you get into another day, the day increases. You get into 21st, and you get into 22nd, and you get into 23rd, right? And that's what happens. But in financial date, it's not so. If you don't perform this particular action, you will be stuck on a particular date. If you don't perform this, an EOD doesn't run. So let's say a bank was on the financial date of 1st of August. So, okay, they were on today, 21st of August. At the end of today, if they get into tomorrow, tomorrow's current date is 22nd, but nobody has closed business and EOD has not yet run, their financial date is still going to be on the 21st. If they are still as they are, performing their banking operations, and 23rd comes, and they've still not yet done any of this, they will still be on 21st. But on that 23rd, they can choose to close business, run this EOD, open again, do everything. That will bring them into 22nd, and they will do again, yes, the same day, and do and enter into 23rd, even in one day.
Okay, so the date is dependent on when you close your business.
Yes, and run your EOD.
And
Run your
your
EOD,
business
basically.
and run your
Yes.
This is for the whole bank, not just a branch.
This is for the whole bank. Typical. Pretty much clear, right? So in financial dates, really, what happens is that you can run 1 million financial dates in just one particular day. I mean, theoretically speaking too. Because what happens is that if you run EOD, you can keep on running and running and running and running just to catch up. Let's say you had an institution that was backwards. But you begin to understand what the implications of these things are later on. I just need you to stay with me on some of these things, because we're also going to relate them to some of the things that happen to some banks that sometimes you might be wondering why they occur, but you don't really understand. And then later on, you start, like, I'll give you a very simple instance. I remember then when there was a particular bank. I always used to wonder why they never used to pay me interest. Never used to pay me interest, and I was like, what's this? And I stopped using the bank because I was pissed. I was like, why are we not paying me? Then when I stopped using the bank, they now started paying me interest. I was not like, look, I used to pay bank. So it's only when I stop using you that you know you pay me interest. But really, what happened was that many people don't understand why that kind of thing occurs. Those things are like settings on what you call products. We're going to talk about some of those things. Where what happens is that if you withdraw more than a certain number of times in a month, you will not be qualified. You won't qualify for interest. If the money in your account is below a certain amount, based on different kinds of rules here and there. A lot of people don't know that, so they just think that things even the most interesting thing is that even the bankers don't even understand some of these systems. It's only maybe some select few people that have experienced this, that really know what it's about, that will be able to tell you what's going on. But a whole lot of other people won't be able to explain some of that. So as we still go on, we're going to relate some of these things with things that you know, right? Okay, so you guys are pity.
That open business is
You guys are pity because we're going to die here together.
That open business.
Yes.
So it's from the head office.
Yes,
Can they
now typically, yes, this is from head office. It's a head office personnel usually do that.
Can they control any of the branch from that?
Yes, yes.
So do the branch have to open?
The branches have to open to work. They like to, so from the way control usually is spread across the banks is that they would like to give the different branches the control to do the things that they need to do. So the head office will typically just open business, and the different branches will open when it is they are ready, right, to open. And then when they open, right, then they can now do whatever it is that they need to do. So let's talk about the kind of activities that occur in the bank, right? Today, I'm sure when you walk into, well, people don't really go into the banks nowadays as much as they used to. So I'll talk about that. I'll also talk about, of course, your normal, regular internet banking. So some other concept that we have called types of transactions. Something that we call types of transactions. Now, I need you guys to take note of this part because I'm going to list out types of transactions that occur. Who knows what you, I mean, you guys, I hope you know what you call a teller. When last did you go into a bank?
Like 2 months ago.
2 months ago. When last did you? Yesterday. How often did you go? Not so often. I know many people don't really even go there.
I've never been to a bank this year.
You've never been to a bank this year, right? I think nowadays I only just go because of my ATM card or any of all those.
And they give me a token, and now token is not
I
working.
I'm
only
not
get
even
the
interested in cookies. I don't even go into banks. I do the SMS one. Yeah, it's a messenger. Okay, so that's fine. But I'm sure you guys know who tellers are in the bank, right? The tellers are typically those people at the front, right, that would give you money. Have you ever really wondered what happens when you walk into a bank and you say you want to withdraw money, and then they just like, where does that money come from?
Yeah.
Have you ever like stayed to like think about it? So like there was something that used to happen in those days when, I mean, there wasn't that much of internet banking and mobile banking, where what used to happen was that because there were a lot of queues in the banks, right? Now you might have a lot of people lined up on a particular queue, and then sometimes just when it's getting to your turn, the teller will now stand up and tell you hold on, and you'll be like, which kind of bad luck is this one? How far now attend to me? You know, but you see, the truth about those kind of things then was that there is nothing they could do about it. What they were trying to do was they were trying to go and get more money. That even if they had cash, that they actually had to, so first, so just think about it this way. I am a teller, I work with Mo's Bank, branch A. I walk into the branch in the morning and I walk in with my cash, with my money. Am I going to start attending to you as a customer with my money? Definitely not. I'm not going to do that. So what happens is that as a teller, when I walk into the bank, I am going to, there's a type of transaction that you call buy cash posting. Buy cash or vault out. What that thing implies is a process where the teller, that is me in this case, is going to get money from the vault to transact with customers. Pretty much straightforward, right?
Is this regardless of if like there's still money on like maybe tellers they always have like money
So
like
yeah, so
like-
good question. So the same way there is a buy cash,
Yeah.
is the same way there is a sell cash,
Okay.
right? And the way that the thing happens also is that the tellers typically have upper limits of the total amount of money that they can collect from people. So if it was a teller that was taking in money from people, when they hit that limit, they won't be able to take more. They will have to go and sell it back to the vault, sort of like retiring it to the vault. I don't know if you understand. They'll give it back to the vault, then they can collect more. So let me give you a simple instance. I'm a teller. I start, and let's say my limit is 100,000 naira. I walk into the bank, and let's say when I walk in, the people that are at the counter, they just want to pay money into the account. Because they just want to pay money, I might not need to go and buy cash because it's of no use really. So what's going to happen is that I'm going to go to them and I'll be accepting money, right? When I hit my limit, I will need to take that money and sell it to the vault.
Is the vault a central vault and a vaults?
So there are vaults per branch.
Okay.
Every branch has a physical vault as well as a virtual vault, which we are referring to with regards to the software that we are going to be doing.
Okay, so once you collect money, reach a limit,
Yes,
sell it to the
you have to send it back.
then you're back to zero.
Yes, if you give out more than you have, you can't give out more than you have. When you are about to give out more than you have to go and get more also.
Okay,
The
so
same
you have to go and buy
Yeah,
from the
buy cash from the phone.
Does it incur any cost or just like taking cash?
No, it doesn't kill any
Oh,
cost. No, it doesn't kill. It's of no cost. It's just a way in which. So, in the case of buying cash, the transactions you will need to. Now remember, I said something there initially where I talked about for every debit there must be a credit, right? So now, in this case called buy cash, the two accounts that are involved is the account of the teller and the vault account. So let's also use examples. Let's say the vault had 10 million naira, and the teller walks into the bank and he needs to buy cash. And he wants to buy cash of 1 million naira. When he buys cash, what's going to happen? His account will be debited. His account is an asset account. Remember when I explained the other time. The vault is also an asset account. His account is going to be debited, which is mine, to the tune of what? 1 million naira. And then his account that was 0 will go up to what? 1 million naira. The vault that was 10 million will be credited with 1 million, and the vault will come down to 9 million.
Sorry, just can you repeat this? That just that example.
Okay, so remember the other rules. The other rules I talked about where I said when you debit an asset, it goes up. When you credit an asset, it comes down. Right? You need to remember that. That those things are base fundamental rules that will help along the way. That's why I was saying that if you guys have done some of all those other previous classes, it will really help. But still fine. We'll continue from where we are. Right? So first, when you understand that when you debit an asset, it goes up, and you credit an asset, it comes down. Same thing with expense, but the reverse is this for the other time. And then you understand the account, the type of account you are dealing with at every point in time. So what I've said is that in a buy cash scenario, you are talking about two cash asset accounts, where one is what you call the teller's till, and then the other one is a vault. So let me just give you some bit of cheats, right, in regards to your project, right? When you are doing your project, of course, you're going to have different modules for branches and all that, right? Now, for every branch, you will have to set up what you call a vault, account. When you're also creating users, you would have created users, right? And then when you go to the section where you will create what you call tellers, the process of creating a teller means that you have to assign a cash asset account to that teller, because that person has to have an account such that if that teller wants to go and perform an action called buy cash, all you will need to do is that you know the branch that the guy is in. So if because me, I belong to branch A, if I want to buy cash, right, what's going to happen? You're going to debit my till account and credit the vault of the branch that I belong to.
So just start into the vault. So just start.
Try. I want you to try. Give it a shot. I'll tell you where you're wrong.
Okay.
Yeah.
Is there a way to create a user account? Like,
I need to stop this particular angle because you guys are going to try to relate it directly to your project because you just want to get a project. I need you to understand the concepts first. Then maybe later on you can now ask questions with regards to your project. And besides, very much available. You see me in the Yamaha office for most of the time. I'm usually there. If you have any questions, you can come around and ask me. If I look busy, still come and ask me. Unless I'm in one meeting with some stern-looking faces, right? That's
How
all.
far are you?
Eh?
How far are you?
I'm on the first floor. On the first floor. But that's just on the other side, Sean. You can actually come at any point in time and ask any question.
I don't know this question.
But I'll still go on and still explain what I was. It's just that I am also gauging what I need to explain because, like I said, this class is going to be very long.
What if the vault is empty?
If the vault is empty,
I want to.
very good question. So there is a different process of funding the vault, right? I don't want to get into that particular one, but it's some other. I mean, you're not just going to build a bank with a branch and just expect that there will just be money in the vault now.
And the vault cannot be full.
Huh?
Can the vault be full?
It's not as much money you can put there. As much money you can put. So there's also another type of transaction for funding the vault
Okay.
where you can. So typically that involves, let's say for branches, you have things where you have like working with like the central bank. You get money from some other source that's there's a lot of other more complex process with regards to doing that. But I'm just starting with this other part, right? Where you start with buying cash, right? Very good question, though. Like nobody has ever asked that question. You know, all the times I'm taking this particular class. Very interesting. So we're starting with that buy cash. So I've talked about buy cash. In the same vein, I've talked about sell cash. Sell cash is just the reverse, right? So remember I said buy cash, you debit what? You debit the teller's till and you credit the vault. Sell cash is just the reverse.
And the vault reduces because you're crediting the asset. You're crediting an asset account.
Yes, the two of them are still asset accounts.
And you debit, so that
Yes, but it's just that in the sell cash, you are debiting the vault and crediting the teller's till.
So the vault increases, the teller's till.
Yes, exactly. That's typically what all the tellers will do at the end of the day because it's expected that they will retire the remaining cash that they have with them. So if after transacting the net, so let's say you resume and then you collected 1 million from people and then you paid out 600,000 naira to people. There's a difference of how much, 400,000. You're expected to sell back 400,000 naira. Yes.
So you credit your still and you debit the.
And you debit the vault. Yes. Now typically those things are done by their supervisors. So it's not something that me as a person, if I was a teller, I would just go and I would just be doing it on the system.
So there's someone out of
Yeah, someone else that when the person does it, then the person will give them the cash. And when the person does it, the person will collect the cash. Do you understand? So those actions typically are not things that the teller will do. But we're not talking about that particular angle. Today. Okay, just look at it and assume that they can do it. Right? So now we have buy cash, sell cash. Now I talked about something, so you as a customer, you walk into the bank. Remember I talked about, you come and you want to withdraw money. The teller has taken 1 million naira from the vault. You want to withdraw 100,000 naira, right? Your account is going to be debited with 100,000 naira. Remember I also said then that for every debit, there's at least a credit, right? So that means that if your account is being debited, something has to be credited. And what's going to be credited is the teller's till. So when your account is debited with 100,000 naira and it comes down, that teller's till too is credited with 100,000 naira and it comes down from 1 million to 900,000.
So, sir, your own account is also an asset.
No, so the customer's account is a liability.
The liability.
Remember I talked about that, yes. It's a liability because it's not the bank's money. The bank is holding money on behalf of other people. So anything that is not the bank's money, they are holding on behalf of other people, right? It's a liability to you. If I have money now and I give it to you, it's a liability to you, right? But to me, it's still an asset. It's mine, even though it's not, like I don't have the cash here with me, right? Yes. So that account to the bank is a liability. So when his account is being debited, right, According to liability, when you debit a liability account, what happens? It comes down. And then when you credit an asset account, it does what? It will still come down. So you have cash withdrawal also, and then in the same vein, you can also apply the same thing with what? Cash deposits. Cash deposit is just the reverse.
And every time, it's not every time a transaction occurs in the vault, it affects the teller still.
Every time, no.
Like if you're buying from the vault,
If
the
you're
teller
buying,
still is
okay,
debited.
as if you're buying or selling.
We are buying from the vault.
Yes, that's if you're buying or selling.
Yeah, yes.
But you know you can do some other type of transactions.
With the vault.
Yes, with the vault
Okay.
that don't concern the teller
Teller.
still. You get like the process of funding the vault is something else that will not, yes, that the vault, the teller still is not going to be involved in. Do you understand?
Yes.
Right. So cool. So we've talked about 4 different types of transactions here, right? We talked about 1, buy cash, right? 2, we talked about what? Sell cash. When the buy cash is what? The vault out. Because you're taking out of the vault. And then the sell cash is vault in. And then 3, we have what? Cash deposits. And of course, we have cash withdrawal. Okay, these are just 4. There are 1,000,001 others. We'll talk about the remaining as the class goes on. So, now with regards to this particular diagram, so I'm going to be doing back and forth, right? Diagram just around. With regards to the diagram, we talked about open business, we talked about open branch, right? And we pretty much talked about closed branch and closed business to a certain extent, right? Now, for the banking operations that will typically be performed, right? You have these things I'm talking about here. You're not going to be able to perform all these things until open branch and all that occur. So these kind of operations will occur. Of course, you have other operations like creating of customer accounts, like attending to customers, you know, and logging what you call disputes. You have like issuing cards. There are a whole lot of operations that will typically occur within this particular context. Now, one interesting thing that happens nowadays is with regards channel operations. Channel operations, so when I talk about channel operations, I talk about say things like internet banking or mobile banking. Many of these things nowadays, they don't occur. Then, all the actions that occur will occur within the context of open and closed branch. But today, even if a bank was closed, a branch was closed, or the whole bank was closed, you will still be able to do whatever it is. You don't know that there is anything like that occurs. Sometimes you might actually know. Maybe sometimes, I don't know if some of you might have suspected. Which banks you guys use popularly here? Let me see. GT, Zenith.
GT Bank does that stuff.
Yeah, some of you might be aware, you know, some of all those where you see some balances changing at some point in time and some you get some of those things. So when I'm explaining this thing, one thing you also need to understand is that different banks have different ways that they implement whatever it is they do. What you need to do is you need to understand, right? You just need to have a basic understanding of how it all works. You know, different banks use different software, right? In the same way, we at Abzo, we built our own software, our own banking application, right? For that many of the microfinance banks are using to do, right? And then 1 or 2 commercial banks are using for some parts of their operations, right? So different banks, like I said, have different ways that they implement it. When you have when you have it in your head, you have an idea of how all this works. You will understand that, you know, these things are not really, really, really far-fetched. You know. So I was talking about channels, right? So where
To lose that take your card and it's like
Because you need a full bit.
I take your cards and don't give it back.
Like the ones that
They will break the cards
They will break the cards.
in like a day or so. So there's a policy around banks holding those cards. Typically, I know then what used to happen was that some other time, what happened is when those ATMs swallow your cards, right? You have the bank operators there that can still get them out for you. So normally, if that happens to you and the bank is open, go into the bank and tell them, let them try and get it out for you and give it back to you. Right? But there's usually a process. Sometimes they might not be able to get it out at that point in time. And I think there is some law with regards to some 24-hour stuff that says that if it's not if it's not given back within 24 hours, they should break it. Yeah. Because I think some time ago or so, there was some fraud related yes, with regards to all of that. So in order to reduce that, they had to write some policies around all that. So people don't usually. Has that happened to any of you?
Yes.
What did you do? You forgot your pins.
I just put it inside.
You see, if actually gave me the money.
Because the only time it happened to me was when I know I forgot my
No,
pin.
he didn't pay me.
I don't
And
know what's
he
funny.
just showed like
Wait.
the screen.
All my friend
like,
like steal my shit and
And
The
you already-
common scenario is
Some
that
come
the
from
thing will just go off like and follow this. That's the normal thing in zero.
I
Just
can't go to the bank because the bank is not there.
you
It's
have
just
to-
the ATM.
Oh, okay, you have to wait for them to come and move money or something.
No, it's
No.
gone.
Okay,
It's
it's like,
gone. Because the bank is not in the school.
okay, it's usually in school.
Yeah.
So this is something like happens in Covenant.
It
Yeah,
does.
so
Once it just goes off.
You know, in my response, you just follow the car, just
They
enter
did
and
the
start
secret
shouting.
test. I was like, don't use
It's
that.
not hard,
There's no,
but
like,
just
screen
enter and
like,
start
they're
shouting.
like-
Yeah, so sometimes some of those security guys usually know there's some ATMs that are usually prone to, like an ATM might actually malfunction, right? And if it's malfunctioning, those kind of things can happen. You know, so just something very
You
funny.
actually want those ladies.
So there's what you call, for instance, there's what you call cash retract, right?
Yeah.
Cash retract is where if you try to, or dispense error. Dispense error is where you try to get money, right? And then let's say the ATM doesn't have money. This is beyond the class. Right? You try to get money and the ATM doesn't have money. But what happens typically is that when you put your card into an ATM, you put your PIN and you see how much you want to withdraw, right? What typically should happen is that the ATM should find out whether it has enough cash before it should even proceed, right? Now at that point in time, if it has already sent a response to the bank, and the bank has said, okay, go ahead and pay, because the person has money and has debited your account. Now if the ATM at that point doesn't now have money, what should happen is that it should trigger an automatic reversal, right? For them to credit back your account, so that you will just see debit credit, and you can still withdraw your money somewhere else. But sometimes what you have is that functionality is disabled on some ATMs. They will even tell you, so cash retract is disabled on this ATM.
Yeah.
I don't know if you've seen on some.
Yeah.
I see that almost every time.
Yes, there are some ATMs.
When do
you
you
know, it's not going to pay. That means that one you have to walk into the bank and make your complaint that I don't get it. So sometimes
to disable cash retraction.
so some of them sometimes they just do that thing as a it's not like it happens really. Maybe because they've seen that it happens to some people, they don't put that message. It doesn't mean that it happens to everybody. You know, typically. It's just some of all those funny interesting stuff. But interestingly, there's actually even meant to be another class for this channel related stuff. Not me taking it, someone else, but okay. We've done 1 hour, right? Ibuko, you're changing something on me?
Yeah.
Okay. I was trying to also chill for you.
Good, bro.
We've done 1 hour and I don't even feel like I've started.
No, I mean, it's calm, man. I don't feel like I started it last.
Yeah, just come in now.
Oh, yeah, that's true.
Just come
Alright,
in.
don't write it down. Okay. Okay, so I've talked basically about part of this, part of that, right? Part of this, I can't really talk about all the banking operations that will typically exist. There are a whole lot of them, right? If you want to take a loan, you walk into a bank and you want to take a loan. I'm going to talk about loans, fixables and all that. And maybe some other things, investments, we won't go into some of all those other things. But at least we'll talk about the ones that relate to your project so that you know how exactly they are going ahead. Right. So some of the banking operations, close business, right? Close branch, close business. Now, with regards to this run EOD, EOM, EOM, we will talk about this in the course of talking about all this. So you're going to understand that. We will pick out each of them one by one. We've talked about two already. We'll talk about some other ones here and there. I'll still bring in some other concepts here. Then when we're done, then we'll call it a wrap. So while I'm doing that, I actually want to erase this so that I can. Yes, I can. So hope I can go ahead.
Yes.
I'll leave this asset income part. So I'm going to start with fixed deposits. Fixed deposits. Who's going to try and explain what it is? Does anybody have a fixed deposit here? Don't lie. No, some people will be like, I have it. Let me not know that I have so much money.
I thought Securities account is like that.
I think you know what that
Securities
is.
account.
Well, you can have a current account and have like 1K inside.
Okay.
But trust me, you can't have a fixed deposit and have 1K.
I
So does anybody have a fixed deposit? Okay, who knows what a fixed deposit is about? Just what you know about it. Anybody, don't worry, we'll still talk about it. Huh?
I know.
Thank you.
Yeah, it's a kind of account that you deposit a certain amount of money over a period of time, but you cannot withdraw over that period.
Good.
And then you get some interest at the end.
So, cool. So not that you can't, so just to correct something, it's not that you can't get the money back.
Very penalized or something.
Exactly.
It's like piggy bank.
Okay, so does any of you know
Piggy bank.
piggy bank?
They don't allow you on.
I heard piggy bank is very popular among the youths.
Oh, I used it in school, like you helped me a lot.
Piggy vest. Like,
we can't save.
I don't know any of my mates doing piggy vest.
No, you guys can't save now.
I don't piggy vest
You
though.
guys will time and all that.
Like the investment part, I don't trust it.
That's quite interesting.
You are 25.
I think if you are 25 and all, I don't think you know how to save. Anybody in generation, I don't think we know how to save. I think
No,
that's the
but
problem.
I know quite a lot of people that still have problems with saving. And some people depend on salaries and all that. And when it just comes to spend it, it happened to me even up to a point in time, But of course, when you do things like budgeting,
I mean, that's why it's another piggy bank.
That's what we do.
yeah, it's good. No, it's good. I mean, I was actually impressed when I saw some of all that.
Do they also do
Banks.
things on the back end?
Which one?
Piggy bank.
So it's left to you to when you see what this thing is about. It's left to you to decide whether you think they do it or not.
Oh, okay.
Do they have their own microfinance bank?
Yes, but if they have, then they will. They will definitely.
Okay,
Okay.
are we done with savings and credit accounts?
No. So the reason why I'm starting with fixed deposits is that I'm starting with it. And the reason I'm starting with fixed deposits is because savings and current or fixed deposits is sort of like a subset of savings and current accounts. It's a subset, so you will see why. So IK, you talked about putting in money for a period of time with the expectation that what you will get some interest, right, at the end of that period, right? Cool. So based on that, and it's a very straightforward.
So is it at the end of that period or every month or something?
Good question.
It's very current.
Very good question. So why do you think it is this way? Is that how Piggyverse does it?
No, I'm not familiar with it.
No, I don't know. You said this because you had something in mind.
No, it's just what I've heard. I'm not sure if it's fixed.
Okay, so we'll talk about all of that. We'll talk about all of that, right? So well, that's why I said good question. So I just want to write down some things. When you understand all of these things, you will be a guru. If anybody tells you about putting money in anything, like making interest and all that, you will understand the rudimentary, you understand what goes on there and that. You will see, so you see this thing we're talking about financial dates and all that. They've not really seen where it's applicable, but you're going to see, you're going to start seeing it now. EOD, EOM, EOI, we're going to start talking about them, right? So cool. Now, fixed deposits. Let's see. So let me talk about the fixed amount. The amount. 2, of course, we have interest. 3, we have what we call part liquidation. 4, we have schedule rollover. 5, schedule rollover. That's interest. 6, schedule pay monthly. So the part you talked about, before we know this 6 part, when you understand all this fixed deposits, you'll see that it's pretty much straightforward. So I'm going to use examples. Very simple examples. Okay, sorry, after that I've missed interest, amount interest, then we also have duration. Interest percentage. Interest in percent. So amount, duration, interest, part duration, rollover with interest, and should you pay the customer monthly? If I remember anything, I'll pretty much have it. So now, something that you also need to note, just across board, first is something with regards to interest. This cuts across. Anytime anybody is telling you in banking or generally, anytime anybody is telling you anything with regards to interest, what's the interest? What's the percentage? It is always per annum, unless otherwise stated. It is always per annum, unless otherwise stated. So when I say unless otherwise stated, what I mean is, unless they say it is 2% per month. But if they just say 2%, just assume that is per annum. That means it is for 1 year. So the reason is this: sometimes some people would expect that because if they say fix 1 million naira and then they will pay you 10%, then you now start counting that if I get 10% in January and I get 10% in February and I get 10% in March, then by December I'm balling. You know, but that's not what it is, right? Because that 10% is 10% for the year, or what typically fixed deposits today go around 12 to 13% or thereabouts. So it's like 1% per month, right? But nobody's going to just come and do 1% with you because they want your money. For the reason for fixed deposits is that banks are trying to collect your money and do business with them to make more money so that they can share the spread with you. The spread meaning how much you're going to pay. So if a bank takes fixed deposits from people, say at around 10 to 15%, right? Say 10 million naira. And then when they are done, they now take those monies and now give them out as loans to other people. Loans today go for as high as 30%, 40%, 50% per annum. Now that means that when they now 10 million naira that the bank might have taken, and then they know they are going to pay you say 10%, which is 1 million naira, right? But based on what they got 3 million naira, right? So out of that 3 million naira, they paid you 1 million naira. But that remaining 2 million naira, of course, they have staff costs, they have this, they have that, and the rest of them. They will use it, and then the remaining, they will make as profit, right? And it can declare profit. Pretty much, what it is they do. Of course, what you also need to also understand too is that the fact that they collected 10 million naira doesn't mean that they might have loaned out everything. It might not be everything they loaned out, right? Yes, they might, and they might not be, even if they loaned out everything, might not have been for that same period. They might have collected yours earlier, but they didn't loan it immediately they collected it. So, but a lot of dynamics, right, with regards to that. So, but for fixed deposits,
it's not possible for the bank to like not give you your interest. Is it possible?
well, it's possible.
Well, like, is it legal? Like, is it legal?
Is there anything that's impossible? Because I don't know of the possibility. So it's not legal. I mean, the thing is, if you, it's when you have to do a fixed deposit with the bank, you will typically have a contract signed with them, and you can sue them if they don't honor their own part of the agreement. But if the bank folded, why are you going to be suing? Why are you going to be suing? Yeah, like, you will be trying to get to the money first. So so I'm just saying, like, it's not like that happens. People usually get their money from fixed deposits, they're not trying to scare you. Just like they putting money in the bank. Now, if the bank folds up, what happens? Of course, there is an NDIC that their work is to protect depositors' money. Nigerian Deposit Insurance Corporation. Fundamentally, that's what they try to protect the depositors' money first before the investors in the banks will get their money out. But it's tricky. Sometimes you might not get all your money, you might get part of your money. But that's another story for another day, right? So we'll still stay on course. So remember what I talked about, percentages, right? So I'm just going to use a very simple example here. Sorry. This thing. I actually want to put this in. So let me use, so imagine we had a fixed deposit, 1 million naira. And the duration, we're working with the duration of 1 year. And then the interest is what? 10%. How much are you going to pay this guy at the end of the year? Good. You are both correct, sort of, because I understand where you're coming from. You're talking about the 100,000 extra is going to make, right? You're talking about the total that's going to make. Now, remember I was talking about types of transactions before. This is also another type of transaction. So you're going to fix money, right? So typically what's going to happen is that you have money, you would have put money in your normal savings or current account, and then that account will be debited, and then first they will create what they call a fixed deposit account. It's another type of account, and then money is going to be moved from that your account to the fixed deposit account, right? And then the fixed deposit now starts running. So that's actually another type of transaction. It's a straightforward type of transaction. Fixed deposits are liabilities, and your other accounts too is also a liability. So you debit a liability, you credit a liability. You can also carry cash too and go and fix it in the bank, right? You will still do some of all that. So now, you have 1 million here, 1 year, 10%. At the end of
Fixed deposit is a liability to the customer.
To the bank.
You get to the bank.
So you use your money as an asset. You have so much cash. How can it be a liability? How can your money be a liability?
That's how it's come from.
No, so remember, like I said, it is always, we are talking with respect to the bank for the purposes of this class, right? So everything I'm going to say, I'm acting like I'm acting on behalf of the bank, right? So in this case, we have 1 million, 1 year, 10%. So this customer is going to be paid what? An extra 100,000 naira, right? Now, what's the next? So there is something called rollover. Now, what is rollover?
Continue.
Rollover is, do you want it to automatically continue or not? By default, it will continue. By default. Yes, so some people don't know, so maybe you went and you fixed money in the bank and you fixed it for 1 year, right? And then for some reason, around the time it was meant to terminate, you traveled out and the money is still there. and then you came back, let's say the second year, and they now come and start telling you that no, they're meant to pay you for only 1 year. You'll be like, it was not meant to roll over. You have to tell them that it was meant that, you expect it to be for 2 years, right? And now, what you also need to know is that it will compound depending on whether I rolled over with interest or not. So rollover is simple. So remember what I said about rollover. Rollover just simply means that in the first year, you got what? 100,000 naira, right? Now, if that 100,000 naira is paid to your, so remember there's a fixed deposit account, and then there's your savings account or your current account, which was used to move the money. So every fixed deposit account is tied to some other account, right? And we call it savings or current account. Now, when that first 100,000 naira elapses, when that first tenor of 1 year elapses, right? Another tenor is going to start. If that 100,000 naira goes back into your savings or current account, what that means is that it's not rolling over with interest. Which means that in the second year, you will still get another 100,000 naira. But if it rolls over with interest, right, then what's going to happen is that 100,000 naira will go back into your fixed deposit. And fixed deposit is going to be what? 1.1. So at the end of the second year, you're going to get 110,000 naira extra. Do you get? So it's compounding. It keeps on adding up and adding up and adding up like that.
So is it default compounding?
Yes. So you can. So if you're going to do a fixed deposit by default, I'll advise you to do that. Ask them those things. Tell them is it rolling over? I want it to roll over with interest. But if you actually don't want it to roll over, like for instance, you might just want them to be paying you the interest, right? So you can just say, okay, don't worry, let it not roll over. Let it roll over, but let me be getting the interest.
Just regular rollover.
Yes. Yes.
Rollover with interest is the one that
Yes.
pays back to the
Yes.
account.
And then there is no rollover, of course,
Okay,
where
also
you will say that it should just
my
end.
money.
And then what will happen is the money will just go back to your other account at the end of that
Can you
duration.
add more money to the fixed deposit?
Yes, you can.
Can you add more money?
You can, but you see, people don't really do that. The reason why they don't do that is that you would usually negotiate a higher rate with more money. So if I had 10 million naira now, and I negotiated 10% with the bank, if I have an extra 10 million naira, why am I going to want to still be getting everything at 10%?
Okay, so you say, okay, I'm adding more money to
You
this.
get, like, yes, I can, what I can just do is I can start another one. Yes. But that question you also asked is a very important question, because the issue is, if you added more money, then how much interest are you going to get?
Yeah, that's what I'm thinking of too. Because like
If you take out money,
You get
what is the system going to do?
to
So we're going to get to that. That's why you talk about
I have
part
another question. Cash.
Don't worry, it's fine.
During the 1 year period, like you send money, let's say 1 million,
Yes.
and it's you're like 6 months in, and
Yes.
you want to
Pull out some.
deposit more money,
You want to?
like deposit more money
Okay.
into the same fixed deposit.
Yeah, that's the question he wants to ask. So we're going to get to that.
Oh, okay.
We'll get to that. We'll get to that. I want to be sure that you guys have any other questions with regards to. Then to also answer that other question I talked about, the monthly one. Now the monthly one is that, so what some people have now done also is that they added a, so even on our own core banking application today, they added some other interesting setting to sort of like entice customers, because some customers will tell you, can't you be paying me some of the interest? That do I have to wait for 1 year before I'll get my interest on the money back? Can't you be paying me something like periodically? So that's where the paying of monthly stuff comes into play. So at the end of every month, they will pay you a component, that monthly component of the interest.
You just said the company implemented this.
Yeah, that
Like
yes,
they
we have
implemented it
that.
for other companies. Because Apto is not a bank, right?
No, I'm not a bank.
Yes,
we have
we
a core
can-
banking application that we run for
Other bank.
for microfinance banks, yes, and some of
Oh, so you don't implement it custom for that bank and just say,
well, when we implement for one bank, it's open for more.
oh, okay, so it's just a central one that all
Yes.
banks can use.
Yes.
Okay.
Yes. That's basically the idea around cloud applications. You So they implement one and everybody can have access.
Yes.
What they pay you is they pay you what they call rent money. So
Yes.
that's like for the usage for a period of time.
Monthly
So yes, monthly,
yearly rent.
yes, yearly type of stuff. Rent money. Any day they feel like they're not happy, they're free to walk away. So that's the idea around this monthly one. I don't know if that answers that particular question. Like, huh?
Yeah.
Some other people too, what some people too have tried to do is that they have what they call upfront interest.
That's what Piggyback does.
Yeah, so the moment
You
you,
get 10%.
yeah, they will give you that interest just when you
Does
start
that roll
it.
over?
Huh?
Does that mean it doesn't roll over?
The interest can't roll over. They
Yes,
pay
it's
it to
paid
you.
to you.
Yes. But the fixed deposit can roll over. Do you understand?
Yes, just
Yeah.
but that's
Yes, it's just with the principal. What you call the principal, that main amount. So if you put 10,000 naira and then we're going to pay you interest, upfront interest. They pay you at the beginning, but that 10,000 naira when it elapses its first tenor, it can still start again. Another one that they will still pay you another upfront again,
okay.
like that. But everything is not rolling over together. It won't compound.
Yes, to compound. But some companies that are like you get 10%. Sorry, I think I'm diverting to savings because savings give you interest.
Feel free, don't worry. You know,
Savings give you interest
similar.
also,
Yes.
and you keep adding to your savings and moving from it. So how is that? Is it on every money you put into the account? So what if I just put 10,000?
Well, like I said, we're going to get there. You guys are very anxious to understand what goes on there. We're going to get there. So just that's the next part that I really want. Okay, the next two. We're going to talk about part liquidation first before we talk about that. So what's part liquidation? Part liquidation is typically a percentage. So what the bank will do is that, see, in part liquidation, you agree that if you touch your money, you are going to get a part of the interest that is going to be due to you. A part of the interest that's going to be due to you. So what do I mean? Now, what I mean is this. You have 1 million naira that you put in. Now, if you put in 1 million naira in 1 year, that means for 6 months, you're meant to have made how much? 50,000 naira, right?
Yes.
That means on 500,000 naira, you are meant to have made what? 25,000 naira for 6 months. I want you to stay with me. Okay, so what I'm going to do is, I'll change the figures now. I need to change the figures now so that we'll not be carried along, because the thing is 1 million naira is not going to cut it if I'm working with a 360-day year. So now, please take note, I'm working with, so see what I said now, 360-day year. In your application, you can decide how many day years you're working with. 360, 361, 365, 300. So what it means is that it's pretty much a setting. So what that means is that anytime you're dividing by number of days in a year, right, it will use that particular configuration that you said. So for the purposes of this, I'm using a 360-day year. What this thing means is that for a bank, even leap years will still be 360. Well, that's the question.
This is related to computer science.
Okay.
Is it better to use decimals
Or
or double?
feel free.
Because apparently they are long.
Feel free. I know.
Rounding off.
Rounding up issues or money. Some people that some languages have money. Particularly called money. That
With
helps
time.
with, yes, that helps some of all that. That's why I said feel free. You're not building a mission critical app now, right? But research and find out what the best practices are in regards to what you're doing. But don't worry, we'll not really be looking so deeply into some of all that. At least for this particular purpose. Yeah. OG is my name, remember? Not Sam.
I did not tell me that before.
OG, Mogonna. Okay, I didn't mention my name. I'm
Yeah,
very
you
sorry.
did.
OG, Mogonna. OG. 2 letters, OG. Okay, so I said I was going to change the amount. Now, I'm going to use 720,000 naira. That's what I want to use to explain this part calculation. So 720,000. The reason I'm using 720,000 is that divided by 2 is 360.